Hey everyone, Mortgage Nerd. I'll give you a little strategy, something that I show people all the time. So what I want to show you today is something I'm telling a lot of my young friends, younger. I'm still young, at 40. But either way, I have friends that are in their late 20s and early 30s, the millennials, the first-time home buyers, and they're looking at what they're going to do. I say, look, get into something. It doesn't matter. Get into anything with these low rates. Watch my other videos that have come out recently on building wealth through real estate today with rates as low as they are. If you buy a property with rates as low as they are, the amount of money from your payment that's going to principal is huge. It's never been like this in history. It's like half your payment goes to your pocket. It's a savings plan. It's amazing. So if you bought property number one, a small property, you got in, small payment, it's your primary residence, your interest rate's really low, somewhere in the twos probably. Now you're making that payment, you're there for the next year, because you have to live there for at least 1 year. That's the contract you sign on the mortgage. Well, a year from now, rates are still very low, and you say, I want to rent this little house, this little condo or townhouse out, and I want to upgrade because I'm in a relationship right now, and I don't want to be in this condo, I want to be in a townhouse. Let's do that. So, little condo with your really low rate and low payment is rented out to someone who's paying you your own mortgage, and remember, half of that mortgage goes to your equity. That's the advantage of today's interest rates. Then the next property is the little townhouse. So now, you're in a relationship, you're holding your girlfriend's hand or boyfriend's hand, and you're like, hey, we have a townhouse now. The rate is also possibly in the twos, but you put a little bit of money down because it's another primary residence. You got to live there for a year, 12 months. That's what makes the contract valid. But now, you know what? We want to have kids. Yeah. So we want more space. So now I want a single family home with a yard. Of course, rates might be going up by then because now we're in 2022. COVID should be gone, or good vaccine, or I don't know. But one thing is for sure, rates should start going up at some point. But who cares? If a rate is in the threes, still have a large portion of your payment going to principal instead of interest. When the rates get back to the fives and sixes, it's going to be lopsided, mostly interest, not so much principal. Watch my video on amortization. It's a long video that I did. I go in depth. But now you have your single family home, for the wife, the kids, the husband and the kids, whatever it is. So you've gone through this progression. You have your condo, you have your townhouse, you have your single family home, all have historically low rates. And most of your money from your mortgage payment is going to your principal and not your interest. That means it goes to yourself, like putting it into a retirement account. When you sell the house, you get all that money back. You don't get the interest back. But now you have these two rented, the condo and the townhouse, and you have your single family home. Yeah, you need a savings. Listen, you need to have 6 months per property saved, because if those tenants aren't there, or if they stop paying because another virus comes out and does this, or who knows what, you're in trouble. You need to make sure you save. But this is a sound investment strategy for a lifetime. You can sit on that for 10, 20, 30 years. Be in your retirement age and get your 401k, get your Social Security if it's still around, whatever it is. But having these pay you money is gold. And you did it in such a way that, historically speaking, has not been done by previous generations and may not be done by future generations. We don't know. So get in. Millennials, Gen Xers like myself, I'm somewhere in the middle in 1980. I really don't care. Get at this. I'm getting at it. You need to get at it too. Phil Stevenson, Mortgage Nerd.